Hello Sector Watchers, welcome to the show. This is the 77th episode of Sector Spotlight for Tuesday the 27th of April, recording it on Monday the 26th. My name is Julius de Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. My contact details are on the screen, and if you have anything to share or questions to ask, please feel free to approach, and I will usually respond through the same channel as where the question or the remark came in. Tuesday the 27th of April, that's an important day in the Netherlands. It's the birthday of the King and we will be celebrating King's Day. And that means a big party in Amsterdam. If you have never heard of King's Day or Queen's Day as it used to be before the current king became followed his mother, just Google Queen's Day or King's Day or Koningsdag as it's called in Dutch, and just look at the pictures. Just go Google images and look for the pictures and you will see what King's Day in the Netherlands means. It's a city full of orange people having a good time, drinking, partying, pretty much all day long, boats in the canals. It's usually a day full of fun. This year it'll be different. There will be some activities, but it won't be as outgoing as we used to be. And honestly, I can't wait until we can celebrate a proper King's Day again. From a Sector Spotlight perspective, it's the last Tuesday of the month, and that means that we're going to look at seasonality. And that means that we're going to try and see if we can find signals, messages in the seasonal patterns of the various sectors and whether they align or not with what we currently see on relative rotation graphs and the current outlook based on their price charts. Starting with the relative rotation graph for asset classes on the left hand side, and I have chart of SPY zoomed in on the right hand side. It's a daily chart, so we can actually match the daily RRG with what we see on the SPY chart, and what we see here is over the last 5 days. Not much happened. We're just pushing against that high. It's around 418. That big bar here was Friday, and the very small one here is already Monday the 26th. So all in all, not much price action for the S&P 500, and that's reflected on the RRG as well, where you can see that ITOT went up 1%, the benchmark went up 0.7%, and government bonds were up 0.2%. So that story remains the same. Stocks remain on the right hand side positive. Government bonds remain on the left hand side negative, relatively negative. But look at the two tails for the commodity indexes, the commodity ETFs that we're tracking. This GSG and DJP, making a very fast and swift move over the last 5 days, pushing into the leading quadrant from improving, and actually picking up DJP about 3.8% and GSG 1.8%. So these are pretty big moves. Just so you know, what we're talking about here is what I call an open universe. And that means that the symbols on the RRG, there are more symbols on the RRG than there are in the benchmark. So this is actually an expanded universe. So the benchmark, VBINX, is a composition of 60% stocks and 40% bonds. So they're impacted by that. The VBINX is impacted by ITOT, GOV, and to a lesser extent LQD and HYG. The other elements on this RRG, these are the commodities, that's real estate and that's the dollar index, are no part of that benchmark. So they can deviate from that benchmark pretty big, like commodities did last week, and you won't see that reflected in the price change of the benchmark because they're just not represented in that benchmark. Nevertheless, on an asset class level, it becomes more and more interesting to take a look at commodities and maybe create an allocation in your portfolio if you haven't done that already. We quickly go over a few of these charts, and then especially the DJP and GSG, what you see here is that they're actually about to break to new highs. You see that gradual rise in relative strength. We've been discussing that for a while. That is getting more and more body, getting more and more shape, and that's reflected in that pretty big tail on the RRG. It's a long tail. It signals a lot of momentum, signals a lot of power. And what we see here on the chart is DJP just pushed against it, a little bit of a correction, and now a massive push through with 3 very, very strong days. Let's see what happens if we make that a little bit longer. Yeah, you see that this is actually becoming a very, very important breakout level, especially if we can hold that, because this is only the beginning. If we can hold that until the end of the week, that'll be a very strong sign. GSG looks slightly different because it's still angled, but you can see that it's breaking that line. So we got 1, 2, 3 touch points. I had this line in sort of penciled because I really only like angled trend lines that have at least 3 touch points, then they become reliable. And now you see you got 3 touch points for that trend line, and it's breaking now. So we do need to maintain these levels until the end of the week, and preferably because we can also take out the high here. That's 1475. That means that we're also breaking above to a new high, breaking above the previous weekly high. And that's exactly the same as we saw in DJP, where that gradual change of relative strength versus VBNX is now actually picking up strength and giving commodities a boost. Another one that we really need to look at is V&Q. That is the real estate part of that ETF and of that universe, and you can see that that is now actually pushing to its recent highs, and that area is around let's say 100, around 100, and you can see that the relative strength here is coming off those lows, off that support level, starting to push higher. A little bit of loss of momentum here. This is the weekly RRG, but on the daily it's already picking up again. And as you can see, that rotation, as we know, usually pretty strong when it comes from leading through weakening and back into leading. That's usually a strong sign. So I've got pretty strong markets for commodities and real estate, and stocks and bonds remain on the same side with a preference for stocks over bonds. And then over to stocks, to the stock sectors actually. Left hand side we've got the RRG for the 11 S&P sectors, and the chart is updated until April 23rd. So if we could add, I'm gonna select it. Could add, this is today, so I'm gonna stop the chart on Friday. That's a full week, and you can see that the S&P actually lost 10 basis points, almost unchanged is what we had seen on that S&P chart as well. This was Friday prior, and this was last Friday, which is only marginally lower, and then we dipped during the week and we went up a little bit. What we see on the RRG is a lot of moves, a lot of vertical moves actually. So it's a lot of momentum-based moves, not a lot of change in relative strength, not a lot of change on the horizontal axis, but quite big changes on the vertical axis in the RS momentum scale. And if we look at the big winners, that's real estate and healthcare. So real estate actually rotating back into the leading quadrant from weakening, so that's pretty good. And then we have healthcare actually rapidly moving. Well, on Monday it was inside the lagging quadrant, and now it's pushing into the leading quadrant on Friday and actually moving further in today. So healthcare actually picking up steam a little bit. That's surprising. Well, maybe not surprising, but encouraging, let me put it like that. Then we have a good week for industrials, been picking up, but we go lower in the performance. It's 40 basis points. Nice pickup, although it's still inside the lagging quadrant. We got materials starting to move towards leading. That is a 30 bips gain. And then we have financials losing 10 basis points, picking up a little bit of momentum, but it's coming out of the lagging quadrant and now only marginally into improving. This is SPY, and then below the white line here are the underperformers for last week, which is Staples with 30 basis points, although the tail is pointing upward. It's picking up a little bit of relative strength, at least the momentum part of it. Technology coming down again. That's going up and down and up and down. Technology and discretionary together. Actually, let me put discretionary back here because these tails are moving in tandem. I find them hard to read. The charts, the price charts still look good, but the relative is still very, very dubious, very, very doubtful. And we'll have another look at that later on. We're going to start looking at the weekly charts in combination with seasonality. On the daily, tech and discretionary actually underperforming last week, and their tails are pointing lower. Same goes for communication services, which is now pushing rapidly into the lagging quadrant on the daily chart. Not a strong performance, losing 50 basis points, 40 bips under SPY. Utilities inside leading but losing in absolute terms, 90 bips, and underperforming the S&P 500, not surprisingly. So you can see that because there's the color changes, you can see that the market is sort of, I think, searching a new equilibrium, searching for new leadership, and it can't really find it, and that's why we've got these big momentum moves on the daily chart. And it's a bit of a shall I call it unclear. It's not, there's no very clear message in terms of sector rotations. Not very clear which sectors are leading, which sectors are lagging. They're all over the place, and that's what you see on an RRG like this, where you got actually red and blue sectors outperforming. The greens is what you expect outperforming, but we also got strong underperformance for energy, for example, which is inside the improving quadrant and had a very, it's moving higher on the RS momentum scale, and then all of a sudden you see that it's at the lower end of the changes of that week. Pretty unclear picture, and that's what we see here for the last week and a half of the S&P 500. There's pretty much no direction for the S&P itself. We're going to take a real quick break here, and after the break we're going to try to put all of this into perspective together with the patterns that we can read from the seasonality charts for these sectors, and see if there are any sectors where current rotation on the RRG is aligning with what we can expect from the seasonal pattern. Let's start our seasonal segment with a look at the seasonality for the S&P itself. The chart is on the left. That's 20 years of history of seasonal performance. And in this case, it's the S&P, so it's seasonal. It's not relative. It's for the S&P itself. April was one of the better months, together with November, with an 80% chance, 80% historical odds of closing higher than it opened. And we see that May is also pretty good. Not as good, but around 70%, almost 70%. And where in April we were expecting 2.5% rise, and we're actually currently up around 5%, so we're beating that average gain in April almost by 100%, so 2 times 2.5. And going into May, we can still expect a strong market, although the odds are not as good as they were in April. And the average performance for the S&P 500 was 60 basis points higher over the last 20 years. So that's the general expectation for the S&P going into May. 70% of the time in the past 20 years, the S&P closed higher in May than it opened, and the average gain was 60 basis points. And let's go and have a look at the individual sector performance. And here is the 3D visualization for seasonality for the individual sectors. Those of you who are regulars here at Sector Spotlight have seen this before. If you are new, I'm happy to share this spreadsheet with you. Just drop me an email and I'll be happy to send to you a copy for your own use. Let's take a look at what's going on in the next 3 months. I'd like to, because seasonality doesn't really, stick to each and every month all the time. So try to look at a little bit of a seasonal pattern going forward. And like 3 months seems like a good number. And there's actually quite a few sectors that have very high or very low readings for May onward. And it starts immediately at the top with materials. There in May, there is it's 30% of the time materials have been outperforming the S&P in May, which means that 70% of the time materials have been underperforming the S&P in May. And June is 45%, that's not, well, it's almost 50, it's almost a flip of the coin, but it's not very, very strong. And then July is also very, not very much. So that's a sector that I would, from a seasonal point of view, need to take a look at if that matches an underperformance going forward. The opposite is true for communication services, where we have 75% in history, 75% of the occasions of May over the last 20 years, communication services actually outperformed the S&P 500. And then June was around 60%, and then July is another pretty good month for communication services. And we're already in a good streak for communication services. So from a seasonal point of view, communication services is looking strong. Well, you probably know, as I do, what happened in April. It actually didn't do very well. So we're going to have a look at the rotation, at the current rotation for communication services. Another one which is giving us very bad numbers is financials. 35% of the time, 35% of the occasions, financials outperformed the S&P 500, which means 65% it underperformed. That's a weak expectation for financials going forward. And it actually carries over into June. And then in July, it picks up a little bit. It's got a little bit better. But for the next, well, at least the next few weeks, I think that the seasonal message here is that we should expect a weaker rotation for financials going forward. And the other ones here, these are around 50, there's not much going on. Technology is it's 65%, which is sort of good for May, but then you got to 30% in June, and then you go back to 60% in July. So that's not a very clear picture. There's not a very clear rotation or very clear leadership for technology, at least not based on the seasonal pattern. Same goes for staples. That's around 50%. Now I go to real estate. That looks a little bit better in March. I think I did a video in March for seasonality. It said a seasonal surprise for real estate, and that was based on the 72% that was here right in the middle of two sort of middle of the road months. And then we go to 61% in May. We got around 60, and now we go to 72. So it's not super strong, but the 70 is pretty good. And it's actually a sector that's been doing very well recently. So we're going to look at that later. And that could be an interesting sector to keep an eye on and continue holding. Utilities, not much going on. And then healthcare picking up. 60% is not super strong, just like it was in April, although we are starting the month pretty strong for, or ending the month of April very strong for healthcare, as we just saw in the overview. But then June looks pretty strong with 70%. So the way I read this here is that we're strong, and then all of a sudden we're really strong. So we're going into a strong streak of months or weeks for the healthcare sector. Now, what are the numbers that we can expect from these rotations going forward. That's on the next slide. There we see the average relative return versus SPY. And then where we had materials with a weak expectation, that's confirmed by the average return, which is actually below SPY. So 20 or 30 bips below the return of SPY in May and June and flat in July. Communication services, which is actually looking pretty good in terms of outperformance, actually is showing very strong signs in average performance. It's 1.1% over SPY in May and 30 bips, 50 bips in June and July. So that's confirming that strong seasonal expectation. Let's see what happens if we look at the actual charts. Financials, we expected a weak period, 35, 35, 55. And you can see that reflected in the average relative return, which is 20 bips or 80 bips below the S&P 500. Real estate, we saw that we were looking for a strong streak, a strong couple of weeks, and that's 1.2% over the S&P 500 in May, 60 bips over the S&P 500 in June, and even 1.7 in July. So that's, you know, the real estate sector really seems on fire, at least from a historical point of view, and also the average returns are looking very, very strong. And now we've got healthcare, which is actually following that strong, at least the first 2 months here, with 50 and 80 basis points, and then it drops back to in line with the S&P 500. So I'm gonna set up my chart to have the RRG and the price charts next to each other for the sectors that are sending us pretty strong signals here. So there are actually 5 sectors that we need to look at to check whether what we see on the seasonals matches or aligns or completely not aligns with what we see on the RRG and the price chart. And the first one is materials, XLB. If we look at the rotation on the chart, that looks pretty strong. And if you look at the trend here, that looks pretty strong as well. And the uptrend here in relative strength is there, and you see that both RRG lines have just turned up. So this chart, in my opinion, is looking pretty strong for materials going forward. So that does not match the weak expectation that we just read from the seasonal pattern. So materials is not aligning. So the real chart, or the current rotation of materials, is not aligning with what can be expected based on the seasonal pattern. The second sector is communication services. And what we see here is a rotation that is still inside leading, but coming down. So it's losing relative strength. It had a good string of weeks, but it's losing relative strength. So if we look at the price chart, then we see that relative strength over the last 4 weeks has been stabilizing. It touched the upper boundary of the trend channel, stabilizing, and relative strength is hovering above its old resistance, now support level, and the RRG lines are coming down. Now the seasonal pattern is actually pretty strong for communication services. And this chart is not bad, but it could turn bad if this continues. So what we need to do for communication services is keep an eye on this rotation. If this rotation here drops into weakening, but starts to turn back up in the next week or 2, 3, and this continues here and relative strength starts to pick up, then communication services could live up to its expectations of a very good month of May and even going into June and July. At the moment, it's not very sure because the tail is not pointing in the right direction. But it could be a surprise move, and the expected returns are actually pretty good for communication services. So keep an eye on this one. At the moment, it's not matching, but it could change very rapidly when this holds and it starts to turn up and the tail starts to turn back up. Third sector is financials. If you look at financials, then it's inside leading but rolling over. And if we bring up the chart here for financials, and that's the one here, then actually we see, so the seasonality paints a pretty negative picture for financials. It's expecting an underperformance. If we look at the chart here, then we see that it's actually pushing against that resistance, didn't break through, and it's losing relative strength right here. So here I think, it's an early call, but I think that this matches the seasonal pattern much more than communication services. So financials, although it's in leading, it's rolling over, it's bouncing against resistance in relative strength, and it's losing relative strength here. I think that this is a dangerous sector going into the month of May and June. Opposite to real estate, which actually is pushing into the leading quadrant, and you see a pretty strong chart. It's actually taking out its highs here. And we saw the seasonal expectations for real estate still doing pretty good. And especially that rotation pushing into the leading quadrant, and the rotation of V and Q that we saw on the asset class rotation is sending a very strong signal for real estate, which is kind of weird and strange, because usually real estate and financials, especially with the steepening of the yield curve, should expect to be both doing very well, but it's only real estate. So if I have to choose between financials and real estate, for the time being, my vote goes to the real estate sector, especially because of this strong rotation going into the leading quadrant and the break to new highs in real estate, which we don't see in financials, where we're pushing against relative resistance and not a nice up, turnaround as we are seeing it in the real estate sector. Now, finally, the last sector that we have here is healthcare. It's inside lagging and turning up. And if we look at the price chart, it's pushing against its top of its resistance channel, the top of its rising channel, the resistance of that rising channel. But I don't like is the downtrend in relative strength. You see a little bit of a hiccup. That's what we've seen reflecting here. But both RRG lines are below 100. Momentum is picking up a little bit, but not massively. It's inside the lagging quadrant. And the outlook based on seasonality is actually very good for healthcare. So that is not aligning with what we see. And I've actually made a chart of that for you as a reminder. So I'll blow that up as the end. So we got materials minus plus, we got communication services plus minus, maybe a plus. We got financials minus minus, we got real estate plus plus, and we got healthcare plus minus. So the two sectors that are absolutely aligning at the moment are financials in a negative way and real estate in a positive way. These are the main takeaways from the seasonal patterns this week. And maybe there's a little bit of a surprise for communication services. Ladies and gentlemen, this concludes Sector Spotlight for this week. Sector Spotlight airs every Tuesday from 10:30 to 11 a.m. Eastern. I hope you're all well. Please stay safe, and I hope to see you back next week at Sector Spotlight.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.